All right, guys, welcome back for another video. In today's video, I want to revisit a trading idea I posted a little bit earlier and also give an update to a live trade I've been taking. I've been in this trade for a while, but it's price has been at this range that we see on the daily chart for quite a few. Well, feels like a long time. It's been a few weeks down at this level, but I want to kind of revisit the idea of liquidity concepts and institutional order flow. Previously, we identified this level here. So we identified this area of liquidity above these macro highs right here. Price came down, actually came up, formed what appeared to be a lower high, tricked people around in the market. And then ultimately, price makes a very quick parabolic rise for the liquidity above these highs over here and makes one further push up above here before ultimately breaking down and ultimately making a run for these lows down here. So if we kind of zoom into there, that price action right there, we can see on a daily chart kind of the characteristics that define this, right? You get run up above, a parabolic push up above into the liquidity, and then a quick sell off down into some price distinction right here, and then another throw over, and then ultimately you get your break of or confirmation once these lows are taken out here. That's kind of how I'm looking at the current price action. If we go back to the weekly, so you see this this push down below the summer 2021 lows on high volume. And this kind of ties into the way that I look at volume and the way that I think about it, right? I don't necessarily see volume as an indication of continuation. It can be in some instances, but, oftentimes it's a sign of capitulation to a large degree. So like right here, right, you have a very large candle that really represents capitulation. Now you didn't get a V-shaped recovery, right? The market really gyrated around this area for several weeks, really months, you could say, maybe 2 months, running the lows again. But you can see these areas of peak volume, they tend to serve as pivots on the market. You can see that here. Also, again, we don't have very high volume relative to that period over here. But if you look at some of the stablecoin indexes and the way that capital flowed between stablecoins and fiat currencies, then you get a more accurate picture of that. Anyway, price comes down here, and then you get the run below the liquidity here, like you get the run above here. Now let's go on the daily chart. So you get this this run below here, and then another run up, and then our confirmation above this level here. So we'll put a horizontal chart right here. Again, this area acts as resistance. If we close above, we're doing this live, so this is going to be the weekly close and also the daily close. But again, you can see that you have the same type of concept, right? You get the run above the macro liquidity. This is a 3-month divergence Wyckoff distribution pattern. You get a similar run up, confirmation below, as you're getting here. Now, of course, here you had multiple drives. You had 2 drives. Here we didn't get the second drive, but you still have a similar type pattern playing out. And this is an area where people typically get turned around in the market, similar how to somebody might have been turned around up here, myself included. It's pretty natural, but I think we're seeing that pattern play out here as well. Now, I took a trade in anticipation of this happening. And again, so we just got our daily close here. That's also our weekly close. So there's a good deal of confirmation there that, liquidity got ran. Big buyers stepped in the market. Now, this is a secondary layer of confirmation, but if we go to the Bitfinex longs chart on Bitcoin, this shows the Bitcoin longs on Bitfinex. Now, this is a weekly chart, so you can see here that price has gone, or longs have gone pretty parabolic on the exchange. And the reason why Bitfinex is significant is because it's an exchange typically used by whales to, facilitate their trades if they're not holding their, their coins in cold storage. If they're trading actively, typically they do it on Bitfinex. I'm not really sure why, but it's just kind of the exchange has been used by those types of traders. And we can see here, price has gone parabolic. Now, where did price start getting parabolic? It started getting parabolic on the week of May 9th, right here. So really up until that week of May 9th, price action was, going pretty orderly, at least orderly relative to previous, right? It hadn't broken this high yet. It hadn't really gone to extremes until the week of May 9th, which we're looking at right here. Now, if we go back to the price chart on Bybit, we can see that the week of May 9th was this week here that we were talking about, this capitulation candle. So that's when the longs, the Bitfinex whale longs, really started peaking under this on this capitulation week, which was the run below this liquidity below here. So any fund or major institution or whatever who had stop losses down below here, which big funds and big institutions do have stop losses. They do get stopped out of trades. They do take losing trades, believe it or not. Anyway, the point is the whale stepped in the market, took the other side of those orders, at least from my interpretation. And we're seeing this liquidity concept play out here. Um, Again, you get a little bit of gyration. Price moves around, comes up to this area right here, which we can see better on a 4 hour. It's really, whether it's this, might be this level up here. But yeah, price comes up, hits what we'd call a price shelf, price pause. You get a few more drives below these lows for liquidity. Anytime you have like equal lows, right, like here, that's typically going to get ran, right? Because if you're, maybe several people were longing this, they were directionally accurate in the way price ultimately moved, but they got stopped out prior to that movement. Again, these are just liquidity concepts to keep in mind. And then, yeah, so we get our daily close above there. I kind of took my position in the middle of the range here. Um, not a perfect position, but I wasn't really demanding a perfect position. Um, I had, a stop a little bit lower, not directly below these lows, and there were actually a few times in here where, I had a stop at this low previously, so I would have gotten stopped out if I didn't actively manage that position. But I was able to actively manage it, not get stopped out. Ultimately, that paid dividends. Now, a lot of people would characterize this trade as a little bit cavalier, right? Because, really you don't have any confirmation. You don't, right? You don't have confirmation until we had today's daily close. And really, if you're trading like this, you're trading against the trend almost objectively, at least the daily trend at the very least. But with it's just it's one of those things where it's almost so easy to manage risk on these type of trades where you get this contracting environment that you can take a position like that you might not otherwise take, just because the ability to enter a favorable risk reward setup is so high that you can take a little bit of a counter trend trade with that risk reward ratio being so high. And I find it a little bit easier to manage that way, just because right now we do objectively have confirmation on that trade idea. So if you're taking a little bit more of a conservative approach, this today's price action would have been your signal to, now at this point after the close, start looking for a long position. But the problem is, so after this price action, you have a little bit more of a higher strike ratio, right? The the odds of price continuing higher after this close is much higher than it was before the close. So you have a higher strike ratio. But the problem is now you have it's a little bit more difficult to manage risk on this trade. And the way I would manage risk on it, if I wasn't already in this position right here, and just to show you the paper trading account. So right now we've got, this account was over 3 million equity at one point. The recent drawdown took that below the 3 million peak. Now it's back at 2.7 million. But anyway, if I wasn't already in a position and I was just looking to enter after confirmation, then what I would be looking at is like, how do you identify what a swing failure pattern is really? Well, a swing failure pattern is anytime price, if you see price have a confirmation like this, and then you can look this is when you can really use the lower time frames and go down on the lower time frames and frame a trade around that. So you have this volume peak right here above this area here that we marked off. And now this is the swing of interest, right? Especially with this volume profile right here. So I would mark that off. You could even go down to, like an hourly chart or even a 15-minute chart, right? You got your volume spike here. So this is really the swing we're looking at, because you get your volume come in. If you have this volume come in on the breach of liquidity above the highs, then that's really the low you're going to look at, right? And obviously so, because it's heavy volume, and you get the throw over the highs right here, right? We put this area here, and so sorry if some of this is obvious. I just want to walk through the whole thing. Um, so yeah, we get this volume comes in here to throw above the historic highs. Now this is the swing we're looking at. We don't really need to look at this horizontal just to know that liquidity was ran above there and the close was ran above there. So now you're in a position where, maybe you want to add a little bit of market, or maybe you want to ladder in a position or something like that. But maybe you draw a 618 retracement here. There's different methodologies to add risk after confirmation. Again, it's difficult because you're kind of a laggard in a sense that you're getting into position a little bit late. But what is important and what is easily identifiable is this area here. So this area is an area where I would want to manage risk on a trade, right? Regardless of where I entered my position from. So this is the low that brought in the volume on the run above the old highs and ran liquidity above the old highs and led to the close above them. So if this low is lost at 30,500 roughly on Bybit, then that's probably going to start looking like a swing failure pattern. And if that so regardless of where I have my long position entered from, I want to be managing risk at these levels regardless. So maybe I'll just go in there right now and add a stop at 30.04. Again, it doesn't have to be exactly at that level. Maybe I'll leave a little bit of room for price to come down, and it can, maybe run liquidity below these lows. But if it breaks it substantially or gets closed below there, this is the area that we want to be looking at. And so I put a sell stop there, managing roughly half the position. But if that stop gets hit, then I'm going to actively, seriously actively be looking to get out of this position, and put actively managing the trade at that point. So now where do we look for take profit targets on this trade? Well, you have this area of very, very inefficient price movement. So when you have a situation like this where you get this inefficient move down, and then you get a confirmation above these the range here that we looked at, and assuming price is going to continue much further, then price is going to probably move much higher, right? Because it's going to fill the inefficiency generally and move towards areas of efficient price action, which on the daily chart is roughly these lows here. And again, this is a level we had talked about. If you guys were following my previous trading journal entries, it was actually this monthly low right here that I was looking at. So that daily level is confluent with this. It's actually 37,151 on Bybit exactly. I was looking at this as a monthly low, right? Price comes down, sets in a low, starts taking out the highs. Now, if this were to continue being a monthly low, higher low relative to this low, then you would have wanted to see the highs being taken out and the lows defended. So when the low here got taken out, that was my invalidation on my long position. That's where I had a stop loss order for the entire position. And if we go down to a daily, you can see that volatility really picked up when that monthly level was lost. and it was a good place to have a stop loss. Well, on the flip side, that level has staying power in the sense that, when if price retraces, that's also going to be a good place to take profit. Both take profit on a long position or enter a short position if you're if that's what you're looking for. So really, that would be an area. This is a very clear pivot on the market. Again, has major staying power in the sense that it was a pivot to the upside, and when broken, it's still relevant, still a pivot. So I'd be looking to take the majority of the risk of this position off there. Of course, there'd be other areas along the way. But really, price moves so inefficiently down to this level. It may pause a little bit on the way up, but really, it's just really it's that 37,150 level I'd really be looking at on this trade. Anyway, I hope you guys like this video. If you guys like this content, please just make sure to like the video, subscribe to the channel, and I'll catch you guys in the next video.